Welcome back, everyone. As you know, 2 days ago, the governor of the Bank of Canada, Tiff Macklem, cut the interest rate by 25 basis points and had a 45 minutes press conference with the deputy, Karen Rogers. After that, there was a mix of opinions after the press conference. I sensed personally, after breaking down all the points that were discussed, some concern, some fear, some apprehension, and lots of doubts about what will happen. So we had a Bank of Canada governor, especially the deputy, saying to the press that they had no forecast, no knowledge of what could happen, and they were basing themselves on a survey that they did that they got from business owners right now, and they might have some feedback and projection in their next monetary policy and rate announcement of April. In the meantime, what we did is we went and took a deep dive of the press conference, and we'll break that down for you. Timestamps, I'll add that so that if you want to jump forward and watch what you want to basically what you're interested in, please feel free to do that. So let's start with the effect of tariffs. Okay, so tariffs will definitely weaken the Canadian economy. So at least Steve Macklem recognized that. And what will happen is there will be a weaker demand from the US for Canadian exports. So exports will drop. There will be a ripple effect on the Canadian side now that we know. So what are Canadian businesses? We don't really care about the US side. What we want to know is what are Canadian businesses doing? That's our main concern right now. So first of all, from the survey that the Bank of Canada did right now in January and February, there is a reduction of investment of capex in the business. There is also a scale back or freeze in hiring. So there's no layoffs yet. So most probably those business owners want to see, especially those ones that will be impacted by the trade import-export, want to see whether Trump is serious. We don't know. He's been basically back and forth 3 times on those tariff threats because he knows that he will hurt his own economy. So we want to know if that's a negotiation ploy or he's trying to force the Canadian hand to do something. We don't know yet. We shall see. Okay. So, scale back in hiring, reduction in investment. Everyone is more cautious. They want to protect existing cash flow and liquidity to see how long they can last. Completely different from COVID. We'll talk about that later. This time there's a different supply chain shock. Completely different here. Okay. Is Time will tell. We don't really know now, but Canadians, business owners, employees right now are scared and worried about job security. We don't know. And we need to understand that Canadians are highly leveraged, highly in debt, and living paycheck to paycheck. On a recent survey that I think we mentioned on one of our channels, Instagram probably, last week, MNP had a survey, and most Canadians, is more than 50% were $161 away from filing for bankruptcy or defaulting on debts. And we know that there's a sequence of default. We'll go from non-housing debt, meaning is credit cards, lines of credit unsecured, will go to maybe those easy loans, and then we might go to the car loan, and then other recreational, if you have a motorcycle, quad, trailer, RV, boat, ski-doo, etc., snowmobile. And then the last one will start being mortgages. Mortgages, they will try, because of their family, Canadians really pay off their mortgages well on time, but our broker, Sesh Sandhi, gave me some insights as to clients he spoke to recently, and we had people who were 12 months in arrears on their mortgages. Some of them were subprime lenders, some of them were prime banks. We had private mortgage arrears. So those kind of situations will definitely, 12 months is crazy that the lender is still keeping that active without starting a power of sale against that client. So we'll see. Time will tell, but I think that very soon, it's the market is sensing some panic. Is there is fear right now, and we'll see April 2nd whether Trump is right or not. That's 2 weeks away. We'll know, and we'll see what happens. Um, Import-export sectors will be hit, definitely. We saw, if I'm correct, this week, aluminum tariffs. So there is Algoma, some steel factory, or I might be wrong, but some factory in Algoma laid off some people already. 20 people were laid off, and companies will try to limit the bleeding, but it's coming. So let's make sure that we know how to plan accordingly. Small caveat, like domestic demand will slow as well, but we'll see that. So as let's understand that if that's one of your concerns and you might want to look at repositioning your debts, I would say reach out to our team. Our broker, Sesh Sandhi, is happy to sit with you and look at your finances, your debt, your income, potential fallback or plan B if you have to be without a job for a few months until you get back on your feet, what to do with your mortgage, how to make sure you can handle the debt. Reach out. There's no problem with asking questions. It's free, but you might as well get the advice now than waiting for the last minute, because it might be too late once that hits. Okay, because it might hit several layers, several industries at the same time, and banks will panic like we saw as before as well. Now, first layer of problems for the Canadian economy. Canadian dollar will depreciate compared to US dollars. What does that mean for you? Okay, we'll try to do a separate video on depreciation and how currency adapt, etc. later. But is Canadian exports, imports will be more expensive. Export will be cheaper for the US. We might get less money, but they might increase is their demand for our products because Canada will be on sale for the US. Okay. Now, on the Canadian side, as we retaliate, which isn't really a good idea if we think about it, now there is a tax on Canadian. There is a hidden tax, meaning that other than the currency, Canadian dollar depreciating, now we'll have products being more expensive for Canadians. And that decision is from Canadian politicians deliberately making our products more expensive, our imports more expensive to hit the US, but it will hit us first. Okay. So imports will be expensive, increased cost. And when businesses will have those increased costs, they won't cut in their profit. They won't cut down or reduce their profit. They will pass on those costs to the end consumer, you and I. Very important to understand. And as that happens more and more, inflation will trickle down. Okay, food, gas, think of anything and everything that we need, right? Could be electronics, could be clothing, everything that we have as imports that we use on a day-to-day basis. Now, what are Canadian businesses doing right now? They're looking at non-US suppliers. They're trying to readjust their supply chain and their providers of goods mostly. But the problem with that is we haven't integrated supply chain with the United States. It's easy to flow goods in and out of the country. It's been like that for decades. Finding new suppliers that will replace that and that we need to ship from overseas, let's say be it Mexico or be it Europe, it will take time and it won't replace the easiness of doing business with the States. Very important to note that. And they might be looking for some band-aid solutions when it might have been easier to go back to the States and most probably find a way to end those tariffs war, those trade wars, because it's hurting both economies. But it's hurting us more right now as Canada, right? I don't know what the new prime minister, the interim prime minister, Mark Carney, will do about that, but we shall see. He is being sworn in today. So we'll see what the game plan is. I don't know what Ontario is doing. Hopefully they won't cut electricity for the states. That might cause more and more problems for us, but we'll see as we need strong leadership right now, and we'll see what happens. Now, a costs of changing supply chain will have the same impact as the retaliatory tariffs will end up with you and I. Products will be more expensive. We will bring back inflation, which is a monster that the Bank of Canada wants to avoid as much as possible. Towards like the mid or the end of the press conference, the governor was very worried that now he's stuck on both sides of that spectrum. He wants to make sure that he keeps the Canadian economy into consumption and spending mode, which he has to do, but he doesn't want to lower rates and trigger more inflation, a thing that he's been combating for the last 24 months, and looks like inflation is back under control right now. So things can go wrong easily, and we want to avoid that, right? So the Bank of Canada right now is stuck between avoiding a recession and preventing inflation. Employers plan to reduce or freeze hiring 40%, okay? And 40% will probably be most of them those involved in the import and export sector. Let's make sure of that. There is a risk of potential layoffs. So Tiff Macklem acknowledged that. So there will be unemployment going up, most probably. It's just that it's so uncertain right now that they can't really put a number on that. And they also don't want to scare the population, especially as the spring market of real estate is starting. And as rates are going down, they want people to go out and spend. Let's understand that real estate is a $300 billion industry. They don't want to scare people, and they don't want to slow down the spending on real estate, right? So we will cover what we've analyzed from the recent Toronto Real Estate Board about numbers for detached condos, semi-detached in the GTA area. And we've seen some very interesting stats, mainly for the city of Toronto. So that as well get them a little bit concerned, because they don't want people to be scared. When people are scared, they don't go out spending. If Canadians, when we think about it, if Canadians are worried about losing their job for at least one of the spouse, their focus would be on savings, because they need to feed their family. They might as well rent for like 1 or 2 years until things get better. Fear will freeze the real estate market. We don't want, and the Bank of Canada governor doesn't want that to happen. Will be a big problem for the economy, as businesses will slow down, as consumers will slow down. So the economy will have an issue. Okay. So that now the deputy governor mentioned that or the Bank of Canada has no real forecasting model. So everyone is in doubt is if the main organization or institution has no idea where we're heading, is we have some concerns here. But they promised to get back to everyone in their April announcement. So we'll see. We'll give them 30 days and we'll see what they come up with. Now, business investment will be weaker as compared to 2024. GDP will be lower. Some Canadian businesses try to front run and basically try to get their goods across the border before the tariffs. So basically, we might see before March a spike in exports, but that number will drop in the next few months because there will be less a reduction in exports. So we can expect that Q1, probably beginning of Q2, we'll start seeing some slowdown in activity. Business investment, export will be weaker. We covered that. The unemployment, we covered that as well. If things heat up between those two countries, US and Canada, there will be impact on those sectors, because there will be businesses will start curtailing things to save costs, and employment will be one of the things they will cut down on. Okay. Now, when that happens, what will be the impact, as I covered a little bit earlier? So non-housing debts will see defaults first, definitely. Credit card, unsecured lines of credits, payday loans, easy financial loans, that's going. There will be issues there. There are already some bleeding happening, so that might accelerate. Our loans will be next. From stats that we saw today in the States, car loans have us like defaults on car loans are spiking in the United States right now. So understand that what Dodge and Musk are doing with those mass firing, will impact the market. And the market goes like the same sequence, unsecured debt, and then we'll go to housing eventually. Next, Tiff Macklem was asked, the Bank of Canada governor was asked if there is a recession on the horizon, and their answer is they have no idea whether there is a recession. It was more of a no answer than an answer. So again, they kicked the can down the road and they referred back to the survey. So there was no real answer on whether there is a recession. So Q4 2024 was kind of good, but there was the GST holiday. So we'll have to see on what the next numbers for Q1, maybe March, what will happen, because that GST holiday is now over. And we'll see what CPI numbers, what GDP numbers look like, and then we can start seeing what the big picture looks like for 2025. Okay. When it comes to monetary policy, so that was a good question when they were asked by the press about cutting rates by more than 25 bips. Um, Monetary policy is forward-looking, definitely. And for now, they have no visibility on the future. They can assess what's happening. And for them, the last quarter of 2024 was kind of good for them, right? So there's no risk technically, even if the risk is there, like knocking at the door. So they have no reason to panic. They will panic very soon. I can promise that. But now, for them, 25 was safe, just to like give it a push to the economy and not to like let the economy lag, but we probably will see a more scared and stressed Bank of Canada governor and whole institution in April once we see what the impact of China tariffs and the aluminum tariffs and probably is US retaliating against us retaliating. And we have the dairy issue, we have the other issues that the US has, but the Premier and the Canada team is meeting Lutnick in Washington, D.C. this week, probably. So we'll have some updates, hopefully very soon. We'll see what happens. The Bank of Canada will revisit eventually the rate cuts once the March data is in. So he kind of like bought a little bit of time. He gave himself 2 or 3 weeks to come up with some new decision, and he will basically the Bank of Canada is more reactive than proactive. We've seen that from what happened since like in 2022 or after they had to fight inflation. So they started late, they went a little bit too much, and now from what we see is 400 basis points of increase, but we've only dropped by 225 basis points. So we have more to cut. There is lots of room for the Bank of Canada to cut rates right now to bring us where we were, or at least some equilibrium, where we were getting out of COVID. We might not be at like COVID rates 2.45%, but we might still come close, and that might definitely help for variable rate holders or like people trying to qualify for more mortgages, right? So that's very important. Okay. But right now it's safety. He wants to make sure that he covers his tracks a little bit and wants to make sure there's consumption going into the economy, but not by doing too much because he's still scared of inflation, not being sure how he will control that next time and what tools he will be using. Lots of unpredictability as well on what the US is doing. So they don't know, so they can't really act based on that, right? So trade war will definitely weaken growth. GDP will take a cut, big one, probably. And at the same time, there will be inflationary pressures because of retaliatory tariffs and because of export income. So our revenue will go down and our costs will go up. So that's not really good for Canada. So that's about it. Hopefully that was helpful. Let us know if you have any questions, if you have any comments. We would appreciate. There's lots of data coming out as well very soon. We have some comments on the real estate sales and activity in Toronto, in the GTA where we live as well. So we're seeing lots of things happening as we get into spring market. Looks like spring is nice weather this week, so we'll see if people are ready to get out and start shopping. Rates should help. We've seen some nice little fixed rates, 5-year fixed rates under 4% is across the board. Lots of lenders are really starting to get a little bit aggressive to give some cheaper rates because they want some new business. With the 25 basis point cuts, we will see variable rates dropping, which is very interesting and will help hopefully qualify more people. We still need because of the stress test, we still need the fixed rates to go down to help with the qualification threshold, but we'll get into that hopefully soon as well. Any questions? If you are ready right now and you'd like our mortgage team to help you navigate what your purchasing criteria, if you have some debts and you'd like to see how much you could save if we did a debt consolidation or if we did a refinance, what kind of mortgage product might be the best one for you, do not hesitate. Please, we are always very, very happy to look at that for you. There's no cost in talking to us. So 905-536-4900. And Sesh Sandhi and his team will be more than happy. Lots of great people on the team will be happy to schedule a quick call with you to run some numbers and look at your options. So until next time, thank you for watching, and please feel free to share and comment.